Okay, let's get things started. Hello and welcome. It's Julian here. I'm absolutely excited and honoured to be here with you today. It's something that I've not had the pleasure of doing a lot of lately over the last few years. So I'm very excited to be here, and I'm really looking forward to sharing with you some of the many things that I've been doing, specifically around trading and trading options. So without any further ado, let's get started. Before we get into anything, as normal precautionary, my experience as an active investor and trader and full-time in the business too, from memory, bearing with your necessarily strategies or in and risk and those sorts of things. Involved, so we can sit down together and assess and discuss what we've covered so far, what we've been covering, what we are going to cover this evening, to see if it suits, if it meets all your needs and all that sort of stuff. So I want to emphasize the invitation to have an appointment with me after the session. If you like what you hear or you have any questions about it, I'll encourage that. I'm very excited to be getting back into working with people and doing that sort of stuff. You've seen in the emails that I've not been doing that for a while, and my wife's encouraged me to do it. I've missed it immensely. So yeah, I would love the opportunity to reconnect with you. We've not seen you for a while, and see if we can help you in any way in this that we're covering. Okay, so what's been covered today is I'm going to show you how to supercharge your income trading What if I could show you a proven trading system using the biggest options market in the world and my exact system for profit? Surveys show options trading provides a 300% higher success rate than Forex, futures, or day trading. With the right knowledge and system, options have been a proven winner for decades. Trade costs have never been lower, and today one options contract costs only 65 cents per trade in brokerage fees on the platform that we use. When you look at the flexibility of those platforms, they're absolutely amazing. I have not picked up the telephone to place a call to a broker for literally years. And the opportunities to just trade from my desk, whether I'm at my desktop, laptop, I have every one of those devices that you're looking at there. Some of them are multiples, and I carry them everywhere, depending on what I'm doing. And even the app on the iPhone, as we're trading the US market, often the market's open during our sleeping hours. And the opportunity to just have your telephone, your mobile phone, your iPhone, on your, or Samsung, I suppose. I have an iPhone on the bedside table and just have a glance at how things are going. And that's literally what I do. I have a little glance and then determine if it requires my action. And sometimes I'll pull out the iPad, and sometimes I might use my laptop, which I keep close by as well. And I just think it's amazing because I'm literally generating the bulk of my income through these tools that are basically I carry around with me wherever I go. So a walking office, I suppose. It's just amazing. So all these amazing technology tools these days permit you to be a global investor, and that's just fantastic. Through that very platform that I'm going to show you a lot more about this evening, you're able to literally trade any stock market, or even the alternative strategies like some of the other instruments other than options. You are able to access it through that very same trading platform. So whether you've got an existing portfolio, if you're already trading something else, you can manage it all through the one platform. It's just incredible. Appreciate those rates. So would it be okay if I shared with you a little bit about me? I've been a professional investor since 2002. In recent times, particularly in the last 6 or 7 years, I've gotten seriously involved in property development. I have a number of property development, large land development projects on the go at the moment. I've been a leading investment educator for many years, up until about 3 years ago, where I took a break from that. I'll tell you more about that shortly. And in 2010, Wiley Publishing published my book called Wealth Wisdom. And it's Wealth Wisdom, How Ordinary Australians Can Create Extraordinary Wealth. And I'm going to share with you a very important overview of my particular investment strategy, one that's worked extremely well for me since I first started back in 1995. I think I made my first investment. So my history is that I became interested in the stock market back in 1995. I've been trading options since 1998, and I became fascinated with options because of the ability to be able to control the very expensive stocks for only small amounts of money. At the time when I was first getting started, I didn't have a lot of cash to put into the market, so options were very attractive to me for those reasons. I then became a full-time trader in 2002, and it was around then that I actually moved up to Byron Bay, where I now live after meeting my beautiful wife of many, many years. I think we've been together for 16 years this year. Yeah, that'd be right, because that's when I met her in 2002, about the same time when I made the life change to being full-time and met Freya in that same year. So I've been showing people how to trade since 2003. After I met Freya and I moved up to the Byron Bay area where we still live today, I had lots of people interested in how I'd achieved that at the age of 31. And so I started showing them my trading methods way back then. So I've been educating people for many, many years now. Since then, I've trained over 15,000 people all over the globe in trading and real estate and share investing and some other things as well. So I've really had the most amazing career in being able to share my gift with other people. I feel very blessed at not only what I know when it comes to investing, but the ability to share it and make a difference to other people. That's something I've prided myself on. And that's the part of it that I've really missed over the last few years. So I took the last 3 years off from running a business that became very successful, but made it very busy. And the problem for me at the time was I had become so busy showing people how to invest, I wasn't getting the chance to do as much of it as I desired at the time. And I was feeling a little bit like I wasn't practicing quite what I was preaching at the time. So having the 3 years to take off from speaking about it to actually really getting back into it on a full-time basis, getting into my trading more than I've ever been. I now run a much larger portfolio than I ever have before. And it's been, it's just tremendous for me. The lifestyle that it's given me and my family and the opportunity to be home with my wife and my kids all the time has been absolutely tremendous. So there they are, my beautiful family, Freya, my wife, who I've known for 16 years. And we have 3 children. Jack is now 21, Oliver's now 13, and Sachin is 8. I think this photo is looking a few years old, but I thought I looked good in it, so I wanted to use that one. Anyway, so one of the things I've been doing in the last 3 years is we invested in a 67-acre property right in the middle of town in Mullumbimby, which is a town in the Byron Bay area, and we're very blessed to live in this incredible part of the world and to have 67 acres that wraps around all of the houses, that actually wraps itself onto 5 different residential streets where we literally have this haven of paradise, yet it's only a 4-minute walk to town, to all the shops and everything like that. I feel pretty smitten to have that sort of life and that sort of privilege. These are some of the things that we do. We like to go very fast around the property. That's when we're not looking after animals. We do have some wicked family occasions and events and birthdays and you name it. People are often asking us if they can celebrate their major milestones in their life on the property, and we love doing that. And I've done a lot of that in the last few years, and it's been wonderful. But I have missed the craft of sharing how I do it with people. So let's talk about wealth. If you look at the richest people in the world, they are not rich because of the salary from their job. They are rich because of their investments. It's their businesses, their shareholdings and property portfolios that are what make them millionaires and billionaires. So let me ask you, what do you look for in an investment? We have the Q&A window. If you see the little icon down the bottom of your screen, it says Q&A. I'd love you to punch in some answers into the Q&A. What do you look for in an investment? Why do you invest? Anybody? All right, I'll give you my take on it. Cash flow, good returns, fantastic. The answers are coming in, absolutely. Both of those or all of those. We've got safety, savings. Oh, they're all coming in now. Sorry, I should have given you more time. Fantastic. Thanks for your replies. I'm going to say balance, and balance comes in three forms, and you've mentioned some of it. Firstly, I think your portfolio should be constructed in such a way that it's balanced between different investment classes, and I'll tell you what I mean. It's very important that you've got a mix of investments so that it manages risk. And what you want to do is, so you want to have managing risk or risk management, a very key part of it. You obviously want to have assets in there that are growing in value, so you want capital growth. And of course, we need income. It's income that gives you all the lifestyle. How many people do you know who might be asset rich but cash flow poor? And I think you need that balance. And you may also know people who engage in all income style strategies and high risk strategies, and they're not necessarily accumulating any assets. So they've got the balance wrong and they're not managing the risk well. So now that you know the theory behind it, how do you actually achieve that in a practical sense? I'd like to share that with you. So I created a formula called my Trinity of Wealth formula, and this is the amalgamation or the sum of all of my experiences as an investor over the last, since 1995, so what's that, 23 years. And what I came to realize is that you need a vehicle for cash flow, and for me that's trading, in particular options trading. You need to use that not only for lifestyle purposes, but you also have to put an amount of that aside for the accumulation of growth assets. So some people may use their business or their job for cash flow. I choose to use trading because of all of the conveniences, and I have some skill around that, which I'm looking forward to sharing with you. And when I got started, I used trading to actually invest in shares. And so I've got a strategy for investing in shares, which I call investing for growth. And when I buy shares, I tend to want to hold them for a minimum of 2 to 5 years. Whereas when I'm trading for cash flow, I'm in and out of the market doing trades for income and cash flow and then accumulating shares that way. So we've got what I call bucket number 1 and bucket number 2. However, I believe that property is the ultimate investment vehicle for creating wealth, lifestyle, and financial freedom. So what I've been doing over the course of my investing career is trading for cash flow, investing in shares for growth, and with shares in particular, when they've reached certain profit milestones, I've used that as an opportunity to acquire property. And I've continued to buy houses, renovate houses, buy land, develop land, and that's the scale at which we're doing that at the moment. And so it's the three of them working in combination with each other that has given me the balance. Because if you're only ever investing property, it's very expensive, and unless you're doing deals all the time and you're flipping them and rolling them through, which can be very time consuming and lots of overhead costs associated with that, it's not necessarily an efficient vehicle for cash flow, I don't think. I think real estate is better off being held and enjoying the merits that way. Shares also can be subject to overheads as well in flipping them too often, so they're better off growth. Whereas trading is specifically designed for cash flow, and that cash flow can help you not only accumulate wealth and experience all the disciplines that come with that, but also permits you to have a great lifestyle. And I think if I didn't have the trading component, I wouldn't enjoy the lifestyle and the freedom and the holidays and the family time and all that good stuff. I'd probably still have to be working in a job, even though I'm building a portfolio, if that makes sense. Okay, so trading is a very important part of it. So your portfolio construction has to be made up of what I call a short-term bucket, a medium-term bucket, and a long-term bucket. And our short-term bucket is for income, so trading fits into that bucket. The medium-term bucket, I use shares and business when I'm operating a bigger business, that would go in there. And the longer-term bucket for me is real estate. You can never have too many houses and too many blocks of land as far as I'm concerned. Like the more you have, the better your financial existence will be. And notice that the size of the bucket, where trading represents only a smaller sum of your overall wealth, because it is the one that is considered to be of the highest risk. Shares, if you're using the growth strategy, I tend to follow the Warren Buffett style strategy of share investing. So I'm holding it for the medium term. And that tends to be more reliable and generate more consistent results, because with shares, I'm not in and out of the market all the time. I'm just trading for that. And then, of course, I'm looking to hold my property projects for as long as I need to get huge capital growth. And with land developments in particular, I've got a number of projects at the moment where the land is actually at the raw land stage, not yet DA approved, and it could be 5 years before we even get a DA approval, but I'm happy to hold the land and grow my wealth through the capital growth that way. In the meantime, before it becomes somewhat of an income generation strategy when we start to subdivide, if that makes sense. So through this philosophy and this formula, I don't know how it is that you could ever be wiped out financially, because you are so well diversified, what I call horizontally diversified. And if you have a trading portfolio like I'm going to show you, where I can, on any given day, I could have anywhere in excess of 130 positions, options trading positions open. So I'm diversifying across each of these buckets as well. So not only, and I own a number of different shares and I own a number of different properties. So not only do I have the horizontal diversification to keep me safe and sound, I also have vertical diversification within each of those categories as well. So our overall philosophy is not just trading, it's that you accumulate growth assets and that you enjoy the benefits that property, especially property investing in Australia. So the ultimate wealth is actually, for me, it comes from property. Trading just helps us get more of it faster. Okay, so let's summarize the trinity of wealth. So step one, if you're getting started, is to trade for cash flow or monthly income, and that's how I got started. Step two is to start to invest in growth assets. For me, that's shares. And then step three is to use all the sum of that to start to invest in property. And ultimately, property is what's going to look after you when you no longer want to look at options trading charts and doing, the day-to-day activity that goes with trading, as much as I love it. So there you have it in a nutshell. You group them all together, and that's the trinity of wealth, and that will give you a rock-solid financial position, as I've enjoyed, and that's what's given me the freedom and the lifestyle, not having to have a business to run in the last 3 years, as an example. And yet my wealth has grown even more during that time, even though I haven't had that business operating. And that's what I call financial freedom. And I would love to show you in a lot more detail how we achieve that. So again, I just want to remind you, for those of you who missed the start, the purpose of tonight is to share a few strategies with you, show you trading, but ultimately what I want to do is spend more time with you through a one-on-one appointment. So at the end of this presentation, I just want to remind you that if you'd like to have a chat to me about your circumstances and where you're headed, I would love to be a part of guiding you and directing you on where we might be able to help you along your journey. And we'll do that through a one-on-one appointment. So the whole point of tonight is that you sit down and have an appointment with me. We can do it over the phone. It doesn't have to be face-to-face if you're in another part of the country, but that's the whole purpose of tonight. Okay, so what we're really saying is income is the key to get you started. Without that income and that cash flow, it's very difficult to acquire investments. It's very difficult to have a nice lifestyle, because you can't pay your grocery bill or your holidays in equity, in your property. You can say you've got as many properties as you want. It's not going to send you on holiday. So you need that cash flow vehicle. And for me, trading, or trading options specifically, is just the most incredible vehicle for giving you all those things. We go on regular holidays overseas. I think we're doing it at least every quarter, sometimes even sooner than that. We're talking overseas holidays. The whole family gets backed up and everything like that. And I want to continue to be able to do that with my family, irrespective of where my business may take me after this particular webinar. As much as I love it, I still intend to have many, many holidays, because that's very important. I think at the end of the day, the time that you spend with your loved ones and the inspiration you can be and I guess the pillar that you can be to the people who most love and respect you, being your family. I think that's more important than any amount of wealth, to be honest. Yes, I am wealthy. I think what's made me so is the desire to be a better person, a better husband, a better father, and a better friend to everyone else around me. And I think at the end of the day, that's really what wealth is about, in my opinion, not just money. So what I'm going to show you is how to create income trading option spreads. So not just options, but option spreads, using as little as $100 per trade. You literally, with $100, you can go into the market, into the US market, into the trading platform that I'm going to show you that I use every day. And for $100, you can put a trade on, which is just incredible. And you can profit then whether the market is rising or falling. In fact, we make even more money. I'm going to show you that tonight. I can't wait. We make even more money on a particular strategy when the market goes sideways. And that's what's so unbelievable to me. I still remember the first time I discovered that strategy. I think my life changed that day, and it still continues to bless me on a daily basis. I literally have 3 dozen of that particular strategy open at the moment as we speak, because it is just so compelling. So I'm going to show you how to learn to do all of this through our Instant Income online training program. So what I'm going to be sharing with you tonight is that I've just produced a brand new training program and it teaches you all this stuff in an online training fashion. So you don't even have to come to a live seminar. You can do it, attend via a webinar like you're doing at the moment. And I'll tell you more about that towards the end of the presentation. So what is an option? I believe most of you would have been, as I'm looking through the names, I think most of you would have been to one of my options trading seminars before, so we're not going to spend too much time on the very basics other than to say there are 2 kinds of options. There's call options and put options. And the secret to making money, however, is not to buy the option. So this is a very important secret, okay? If you want to buy the option, you actually want to sell them. You want to be the seller of them. So how do you sell an option without buying it? You write it. You have to become the writer. And this is where the money is. This is where the probability of profit is massively in your favor. And we're going to talk about, we're going to use that term a lot tonight, POP, probability of profit. Okay. Wow, I'm seeing some names from the past that just, it's warming my heart. So, I'm so honored to see you guys again. So, why do we want to be a writer? Because you can be wrong about the direction in which the stock is moving and still make money. And that's what's so incredible. So many people have trading strategies that are so dependent on which way the instrument moves. And when it does not move in that direction, they stand to lose, in some cases, more than what they put into it in some highly leveraged instruments like, foreign exchange and some of those instruments. Whereas with our strategy, firstly, your risk is capped. You cannot lose any more than that $100 that I talked about there. In fact, it's less than the $100 because you're going to get paid on it straight away. That's incredible too. And you don't have to be accurate about the direction. In fact, it can go many, many different ways and still work out for you. And I'm going to show you what I mean by that. So I'm going to share some secrets with you. One of my top secrets, when I discovered this strategy, what I realized was all powerful, is that we have the ability to use market volatility in our favor. We actually turn it into our advantage. And I'll show you why in a second. So write that one down. Market volatility is very, very important. That gives us a massive competitive advantage. It's this factor about my strategy that I think makes it extremely unique and special and different to anything else that's out there. The other thing that is important, which is the other secret, is to use time decay in our favor. Normally when people buy options, the time is actually working against them. So the value will not only be affected in a negative way by the movement of the stock against you, but even if it goes in your favor, sometimes it takes too long and time can be against you. By being on the writer's side, any time decay is actually in our favor in a big way. For example, right now I've got many trades actually ready. This Friday, in 2 days' time, Wednesday, is the end of the options month of April in the US market. So a good 90% of my portfolio is actually set to expire this Friday. And the rate at which I'm accumulating profit this particular week, because that time decay curve, imagine this is where we're in this week at the moment. See, 9 days to expiry. We're in that. In fact, there's 2 days to go. And so what we're doing is we're selling the options earlier in the month. And then when it gets to this time of the month, you get this rapid time decay. So we're selling it to open the trade. So we're selling it for X amount. And then when the time decay kicks in like this, like it is at the moment, you get to buy it back for far less than what you sold it for. And that difference is your profit. And this week is extremely exciting. A couple of students that have actually been helping lately have reported what an amazing night. Just this morning, I was on the phone to a gentleman called Sheldon who actually came and did a training with me, just as a one-off, basically. He said, what are you doing? And I said, I've been trading. And he said, you're not doing seminars anymore. I really want to do your seminars. I got told about you ages ago and all blah, blah. Anyway, I ended up doing a one-on-one. This morning, Sheldon told me that it's his first month. It was a month ago, roughly, that we did the course together. And I did one-on-one. He actually came to Mullumbimby with me. And he said he has he's placed 47 trades this month. 3 of them have not worked out. He needed to close them at a small loss. And all the rest have worked out that he's closing this week because of this. And there's 3 still going. So 47 trades, 6 have question marks around them, only 3 losses. And that's in his first month doing the very strategy I'm showing you now. So that's an incredible rate. And those 3 that he still has open, they still have the potential to end up being a profit in the next 2 days. So he's not sweating on it. What a phenomenal result. So I'm pretty excited about this new training program. Not only its content, the results that I'm seeing just in my first go of actually sharing it with someone, to have gotten that phone call this morning before doing this webinar has been very exciting for me. So when you use volatility and time value in that way, your risk goes down massively and your profits go through the roof. And as I said, we're talking about options spreads. So we're writing options, but we are doing it as a spread. Let me explain what a spread is for those of you who may not know what a spread is. Is there anyone in the group who hasn't seen option spreads at all? Just raise your hand for 1 second. So just the bottom icon on your screen, right in the middle, it is on my terminal. Raise your hand for a second. Okay, so we've got a couple of people who haven't seen spreads. Okay, great. You're going to love it. Once you see the spread, you'll never trade anything else. I can guarantee you that. I'm going to lower your hand now. Thank you very much for your feedback. Okay, so option spreads. Let's talk about my absolute favorite strategy. There's nothing that, I swear, there's no other trading strategy that's anything like it, and I have tried them all. Since 1995, of actually trading options and many other things, I keep coming back to spreads. So what is a spread? It's used for generating regular income, and that's exactly what it does. There's no growth, there's no wealth creation, it's just pure pay me at the end of the week stuff, okay? Now, what I love about spreads is spreads have a much greater probability of profit because we are selling time value. And remember, when you're selling time value, that time decay curve that you saw with that massive graph is entirely in our favor right from the time we open up that transaction. What's fantastic about that, we can make money just from the time decay. The share price does not even have to move. In fact, most of the time we don't want it to move because that actually lowers volatility as well. I'm getting ahead of myself. I'll come back to that. So make profit regardless if the market is going up, down, or sideways. Now, what's even more exciting about it, it's really easy to get started with spreads because even with a small trading bank, because you don't need to own the shares. And as I said, you can literally place one of those trades with as little as $100. And by the way, brokerage fees are only a couple of dollars as well. So it's still worth it even with that small trade. So how to do spreads. Spreads are created by simultaneously buying and selling options at different strike prices. So we're actually placing 2 options trades at the same time and then grouping it together to become the spread. My 3 favorite spread strategies are the bear call spread. If you were in a classroom right now, I would say, what's the call, please? And you would say the bear call spread with a big smile on your face. The other one is the bull put spread. And the third one is the iron condor. And I'm going to share as much as I possibly can with you during this session about these strategies because they are fantastic. They are literally how I generate my living or my income on a daily basis. So let's talk about volatility because this is the key. This is the secret, okay? This is our edge. So write that down. Volatility is our edge. And the key is that when volatility is high, option prices are expensive. So in the last couple of months in particular, the US market has been extremely volatile, just with all the news that we're going on, all the stuff that Donald Trump's up to and all that stuff. What that does is cause uncertainty in the market. We love uncertainty. What happens then is it creates this factor called volatility. In other words, the market's inability to accurately predict what the share price will be in the future. And when that happens, volatility is the measure of that condition. And when volatility is high, option prices are expensive. Now, when you're a buyer of options, that's not good for you because you've got to pay more. But when you are the seller of options and they are expensive, then that is the best time to be trading them because you're selling them when they're expensive. And when the market settles down within the month of our trade, we then get to buy it back for a lot cheaper than what we sold it for. So we love high volatility. And I've been absolutely blessed with the highest volatility I've seen in decades in the last few months. It has just been outstanding. And this month in particular, we had volatility go through the roof at the start of this month with 2 days to the end of the month. And then last night, we had a massive, I was sitting there just watching the market go up with this massive green candle like we've seen. And that was right across the board, all the tech stocks. The SPY was doing the same. And one important thing that we watch is the volatility index. And with that big up move, volatility dropped, which means the options that I'd already sold became worth so much less. So both I and my mate Sheldon, that I told you about earlier, gave us the opportunity to close out dozens of positions. Sheldon got through most of his 47 and we're able to close them out at a profit. So that's very exciting. So we love volatility because when volatility is low, options then become cheap. So we open the trades when volatility is high and we close them when volatility becomes cheap. And none of this has even got to do with time value or the share price movement. And this is our edge, and this is the key. And this is probably the number one secret with the strategy. So just like a stock's price can go up and down, its implied volatility can also go up and down. And we love that. So the key to trading spreads is that we only trade spreads when volatility is high. Now, the good news is it's not the entire list of watch list. We've got a watch list of about 140 stocks. Okay, so it sounds like a lot. I know that sounds like a lot. But we are only ever interested in opening the trades for the ones that have the highest volatility. So I'll show you how we get that data shortly. So it's only the ones that are showing high volatility at the moment that we even have to consider trading because the others don't meet that criteria. So it's not a big job. And the good news is on any given evening, I say evening because we trade at night, obviously US market or early in the morning, I would see a minimum of a dozen new opportunities to open. And lately, it's been anywhere up to 24 to 30 new opportunities that have shown me high volatility that then have charts that also stack up, enabling me to literally place into my portfolio in any given month anywhere from 135 to 250 new option positions. I kid you not. If you are someone who's only ever traded the Australian market, it is completely different. When you trade volatility, you trade spreads in the US market, you will have more opportunities than you could ever dream of. And that's just the one market. It's incredible. So because the options are more expensive when the volatility is high, that's when we want to sell them. So our spread returns are therefore a lot higher than what I've seen in any other country or any other market or any other instrument. So let's talk about the bear call spread and how it works specifically. I've given you all the excitement. Let's give you the facts. Bear call spread is used when we find a highly liquid stock. And as I said, we've got about 140 on our watch list of highly liquid stocks. It's all your blue chips that you know in the US market, all the big names like, you know, the NASDAQ ones, like your Apples and your Netflixes and Google and Facebook and all those guys, and Johnson and Johnson and not British Airways, BA, it's not British Airways. I've got a mind blank at the moment. I know them by their codes. Bank of America, sorry. BA is Bank of America, not British Airways. So I'm not even looking at the code. So all of those names, and it's because they are such large, well-known companies, their trading volumes are through the roof. So they have very predictable trading patterns. That's the first thing. I'm going to show you some examples of that. Also, they are highly liquid. So when you go to sell your option spread, even when you're asking a premium, there is always a buyer for it. And when you go to close that position out, there is always someone willing to sell. And that's very, very important. And as I said, I've got a list of nearly 140 of those in my watch list. So I'm never concerned about liquidity. The other big advantage of having such a huge pool of stocks to choose from is that you can be very efficient. There's not a lot of risk between your buying and your selling components. And with other instruments I've traded in the past, that was always a concern. None of those issues apply here. So we find a highly liquid stock with high volatility in a downtrend. So the bear call spread is specifically used when we find stocks in a downtrend. Within a recent pullback, and I'll show you what I mean by that, at a resistance level, and then we're looking for a bearish candle reversal pattern. And that is our strategy right there. So I know that's a lot to take in, and when you come and you attend Instant Income, I will go into all of these in a lot more detail. It's a big program, but tonight is just about showing you the overview of how it works. Okay, so remember I said we're looking for high volatility stocks. Now the good news is we actually subscribe to a data service that tells us exactly which stocks of our 140 or so opportunities is currently experiencing high volatility. So here's an example. This is just a sample. This is a sample of 6 of them on a particular website. Again, when you do Instant Income, you'll get all of this stuff. And there's a 6 out of the list of 144. And it's showing me, and actually this data service actually lets me sort in order of volatility. And as you can see, we've got Comcast at the top of the list there with an IV rank of 77. IV stands for implied volatility. So the measure of volatility is implied volatility. Implied volatility, we've got an implied volatility rank of 77. Same with Chipotle, same with Capital One. And then you see down the bottom left of the screen, we've got COP there with an IV rank of only 56, and I'm calling that okay. And then IV rank of 40, I'm calling low volatility, and IV rank of 41. So when I trade, I look for volatility that is greater than 50, and the higher it is greater than 50, the more attractive the option premiums will be when I go and do these spreads when I'm selling those options, okay? So these ones are fantastic. They're far greater than 50. In fact, they're far greater than 60. That's why I'm calling them high volatility opportunities. And that's 3 only of what typically shows up on a nightly basis of anywhere from 12 to 24 on average. And that's literally how many opportunities there are each day. So here's a chart of Comcast. So remember, we've seen from our volatility listing that it's high IV ranking. So we would only go and look at its chart. We wouldn't look at the charts. We wouldn't even bother to look at the charts of ones that did not show up with high enough volatility. So here's the chart. I actually snapped this chart only 3 days ago, I think it is, in preparation for this webinar. So it's a very recent chart. And if you just follow my pointer, you can see here that it's in a very clear downtrend, and I'm going to break it down for you what we're doing. So I'm seeing a clear downtrend here, and that's represented by not only obviously seeing it on the chart, we can also see that it's recently broken through a very strong line of support here, and that's a very bearish indication. And moving averages here are also confirming that it's in a downtrend, and we're seeing that by having all 3 of these. And again, in Instant Income, I'll go through all of these in detail. That's our longer-term moving average. It's not only is the share price now well and truly below it, but it's also swinging down. And then you've also got all this space between the moving average, again, sign of a strong downtrend. And remember I said to you, I'm then looking for not only a downtrend, but then a pullback within that downtrend. And we can see that it's actually recently pulled back to this line of What was once a line of support is now a line of resistance. We then get a candle reversal pattern. You can see this pattern here. Again, more detail on that coming much later on. And we have these 4 days in a row of bearish candles. So we've got several signals indicating that this particular stock is heading down. And we also have the added security or reassurance that we now have this major, what was once support, becoming resistance. So even if she swings upwards again, it's going to have a battle breaking that line of resistance. So what would we trade here? If you were trading straight options, you would obviously be considering put options. But in order to make money out of put options, you would need the share price to continue down. With spreads, we don't even need that to happen. We simply need it to remain below that level there. Let me show you how. So with a bear call spread, we're actually using a combination of two different options. One we're calling our long option, one we're calling our short option. I'll tell you what the long and short is in a minute. So we're trading two options at once at different strike prices, however, with the same expiry date. It's what we call a vertical spread. Okay, so we sell the spread to open the trade. So where with normal trading, you would make a purchase to open the trade, we are actually selling to open, and then we instantly get paid income. In other words, that's why I'm calling my program instant income, because you actually get paid instant income when you open the trade, which is incredible. I'll show you how that works. So here's Comcast. Let's go into more detail and I'll show you how it works. So what we're going to do, based on the chart setup that I've just gone through, with your downtrend, broken the support line, we have the pullback here, and then we've got this bearish reversal pattern there. And remember, our volatility ranking was up around the 77 mark, so all of that is good to do an option spread. We know we're going to get a good return out of this simply because of that. So there's that strong resistance, the downtrend, the bearish candle pattern. So what we're going to do now is we're going to write a call and buy a call. We're going to write a call at $35 strike price, and that's our leading leg. That's the one that's going to earn us the money. But if we just wrote that call at the $35 strike and left it at that would actually be a naked call, which would subject us to unlimited risk. That's not a good idea. So we don't own the stock yet. We don't need to own stock. But what we do to limit our risk is to buy another call at a higher strike price. But the key is that we're actually going to be receiving more money as income for the one that we wrote than what we're paying for the one that we're buying. And the difference between that is the credit, that's our income. So let's go through it. So this is looking at our trading platform, which I talked about earlier. It is just phenomenal. All this stuff you used to have to pick up the phone and call your broker, and then your broker would have to spend time going and shopping it around different market makers, and it was very, very complicated process. These days, I get online, I know I'm in the most liquid market on the planet. I know that I'm looking at a stock that is trades huge volume. Look at this particular option. It's currently trading 2,700 contracts of that. And we're only in this example interested in selling one of those. That's how highly liquid it is. So it's not a problem getting someone to buy it. We'll also notice that when we look at the bid price and the ask price, they're very close together. It's a bid and ask of only 3 cents. So this is a sign of a low risk trade right there. So looking at our prices, we normally aim for the mid price between the buyers and the sellers, and the same with the one that we're buying. So in this case, we're actually selling the $35 call, and we're buying the $36 strike call as our insurance. So let's see how that works. So I'm just zooming the chart in closer for you here. So we're selling the 35 call, and based on that pricing there, we will receive on average 55.5 cents per option contract for doing so. And that's our income. However, at this point, it's a naked call. So how do we cap our risk? We then buy the $36 call, and we pay premium for that, and we're paying 30.5 cents for that. These options that we've chosen, as you can see there, is 29 days to expiry. I tend to do these trades to expire in around 1 month's time. And there's a long reason for that, which I'll explain later if I get the opportunity to. But that, to me, from my experience has been the sweet spot. Not too long, not too short. And I will tell you why later, why that's of advantage to us. So we receive 55.5 cents as a credit for selling, assuming we're just doing one contract here, and we're buying that as our insurance. The difference between the two amounts is our income. So we have a credit of 25 cents. However, on the US market, one option contract consists of 100 shares. So to work out what our actual return is, what our actual income is, we simply take that 25 cents and we multiply it by 100. So our income, our instant income for opening this trade is $25 straight into our account. Now, to work out what our investment needs to be before we can get that return, that's based on how much risk is in this trade. Now remember, we sold it at $35 and then we're buying it at $36. What we don't want is for the share price to go above $35. That's not what we want. So if it does do that, that's to our disadvantage. So what we want to do is by buying this call option at $36, we're actually capping that risk. So the most we can lose here in that scenario, before we consider our income, is $1 per option. In other words, when we multiply that risk by 100 shares per contract, our maximum risk for this trade is $100. So that is what the broker would require of us to fund into our account to place this trade. However, didn't we just instantly make $25 in premium after opening that trade? Absolutely. And that's ours to keep forever. No one can ever take that away from us. So our real risk is only $75 on this trade. So what I'm saying is we're risking $75 to make $25, which we get paid straight away. So our return on investment, no matter what happens, our return on investment, sorry, that's not true. If this trade works out in our favor and the share price remains below that $35 call, it can go up to it as long as it doesn't cross it. It can go sideways. It can go down a little bit, or it can go down a lot. If at expiry, which is 29 days away from now, if the share price is below $35, we get to keep the full income of $25. It's only if the share price rises above that $35 call there that we start to pay back some of this money. Now, because we made a 25-cent credit out of this one trade when we opened the trade, it means our break even is actually at $35.25. So what I'm saying to you is, this share price is clearly in a downtrend, and that's what we want. But if for some reason the market were to go against us right now, even if it rose all the way up to $35.25, which is the $35 strike plus our 25-cent credit, which offsets that, even if the share price rises all the way up to $35.25, even at that point, we still are at break even. We've not lost any money. It's only if it goes above $35.25 that we start to lose money. And that money is at its greatest loss when it reaches $36. It doesn't matter how far above $36 it goes. Why? Because we bought this option. It would be increasing in value in our favor. So the most we can lose is up to that $36 point. And the most we can lose financially is $75. Who here would not mind risking $75 in one trade if you knew you could make $25 in return? Put up your hand. And you would make that $25. Didn't matter what the share price did, as long as it didn't rise above $35.25. Can you see how the probability of success just goes through the roof? Because we don't even have to be that good at reading the chart. Put up your hand if you think that would be awesome. 33% return in 29 days to expiry. Fantastic. Great. Awesome. I agree. But check this out. Remember how I said we only enter this trade when volatility was really high, and big down moves like this will cause volatility to go through the roof. The market will rank the options more expensive because of that big volatility. But if it now stabilizes and starts to go sideways, volatility will go right out the option. So this credit of 25 cents that we received when we opened the trade, within literally days of this share price settling down, that might go to 15 cents or 10 cents, which means way before the 29 days is up, you might get an opportunity within the next week or two to close this out. And as long as you're buying the options back to close for less than 25 cents, that is your profit. Now, I will often be happy with a 50% profit if in a couple of weeks' time I can close this trade out, because it means I no longer have to worry about this trade. I'll take the money off the table. And as you remember, I've always explained that even in my Trading Wisely program, when we're buying options, as soon as you're sitting on the profit, we're like bank robbers. You take the money and you run. And that's what we can do here as well. But if this one continues to behave as it is over the next few weeks, chances are it will become worth a way less than that. You can either close it out early, but if it's working in your favor and you just want to leave it alone, that's okay too. If you don't mind waiting the 29 days to expiry. Now, I want to share something else with you. Yes, there are other strategies with a lot more risk that do make the promise of these sorts of returns in shorter time frames. But they are the same very highly leveraged strategies that require you to use lots of leverage and borrowed money. And when they go wrong, not only do you lose what you put into the trade, but you also lose a lot more of your broker's money as well. You know those ones that I'm talking about. With this, the most you can lose is that $75. You have not borrowed anything. You can't lose any more than that. And the other thing is, because I'm setting trades up with about a month to expiry, it doesn't require my attention full-time looking at the screen. In fact, 2 mornings ago, so the way I trade the US market is I get up a little bit earlier before the market closes, and then I get on with my day after the market's closed. 2 mornings ago, I was feeling a little bit tired. Might have been something to do with putting the slides together for this webinar, and I ended up sleeping in. And I actually missed the entire trading session. But I didn't panic at all, because it's not like you need to be watching it. Things don't go that wrong that if you miss a session, you're going to lose money. And that's the beauty about this strategy. You can actually snore your way to financial freedom, if you don't mind me saying so, which is exactly what I did a couple of mornings ago. And then yesterday, or this morning, last trading session, I was actually able to close out a number of those opportunities that I missed that were now in profit because of the reduced time value. So it's fantastic. By the way, brokerage, you're going to love this, is only 65 cents per contract. And if we had done a single contract spread yet, but we've done 2 options, that would mean 2 contracts. And even if we went in and then closed them out early, closed the trade out early, that's 4 transactions, 2 for that one, 2 for that one. That's still only 4 times 65 cents, which means the brokerage on this trade is only $2.60. So I never, ever think about brokerage, because it's virtually nothing. And I remember the days when I used to trade these strategies in Australia, where that trade might have cost me $20 to $30. And so you can't do single contract trades, because if your income's only going to be $25, you can't pay $30 in brokerage, right? So this is why this is so fantastic if you're getting started or getting back into it, or you want to trade a small account. I have actually recently been trading my children. In fact, 2 weekends ago, and I know I haven't been doing seminars, but 2 weekends ago, my son and a group of his friends, 8 of his friends, actually got together and I taught them the instant income course, and they are loving it. Actually, it's 2 weekends ago, and they're absolutely loving it, because realistically, kids can do this, because if all they have to do is get $100 out of their parents to put into a trading account, they can actually trade this and make $25 on that, right? So none of them are interested in working at supermarkets anymore. They want to learn how to trade spreads. And my son happened to tell them that at school, and they go, will he teach us? And we put together a course, and I tell you what, I absolutely loved it. These kids were on the edge of their seat. They were hanging on to every word that I said. We've started a trade. They're halfway through, actually probably a third of the way only through the program, because I'm doing it not in a big chunk as we normally would do it live. Obviously, they've got to go to school, and we're doing it on the weekend. So they're only a third of the way through the program. But I have put them onto the platform, and I have started a trading competition. And so every morning, my son's on the phone when the US market's still open before he goes off to school, and they're talking about their trades for the night and how much money they've made, and they're all excited. In fact, there's a couple of them over staying tonight because they're on school holidays now, because they want to look at charts together. And this is my 13-year-old son and his buddies. So it really is a fabulous strategy, and it's great for small accounts. You may be someone who wants to put a lot more into it, as I do, but it's nice to have that option, and nice to know that brokerage is so cheap that it makes it practical, even kids to do. So 5 ways to make a profit. If the share price goes down, this will make us a profit. If the share price goes sideways, it'll make us a profit. In other words, we'll get to keep, if it goes down or sideways, by expiry, we get to keep the full $25, okay? And we get the $70 back too, by the way. So if it's only, okay, and if it rises but stays below, so it can go up, but as long as it stays below $35, we still get the maximum profit. And remember, we also have time decay in our favor, which permits us to close it out, irrespective of where the share price moves, even if it doesn't move. And volatility will reduce also if the share price doesn't go on that rampant, rapid rampant there as well. And we can make money or profit simply by volatility itself having reduced, because the options will be priced less. And that's fantastic for us. So 5 ways to make money. Remember, our break even's at $35.25 and our max loss is only $75. So amazing, okay? So I'm going to show you several other examples, by the way. I took more time on that one because I wanted to explain all the concepts. Sorry if I took so long. Okay, so spreads offer the highest probability of profit compared to any other trading strategy because of the number of many different ways that the share price can go, and it still works out in your favor. So unlike other unlimited risk strategies that are highly leveraged strategies where you can lose much more than expected, we only have a capped risk here with spreads, and therefore it is a what we call a limited risk strategy, which makes it fantastic for even children. Okay, so remember, we're trading the US market, which is the biggest market of them all. It's the most liquid, the biggest watch list, about 140 stocks, as I said, 133 to be exact, and offering, anywhere from a dozen to 2 dozen opportunities each trading day, which is fantastic. I generally have well over 130 option legs open on any given day, unless it's this time of the month where I start to close them out rapidly. And it was a very busy trading session last night, but it's because all these options are now in profit and I can close them out and don't have to wait until the end of the week when they expire officially. Okay. So taking profits, you can exit, my favorite thing. You can exit your position by closing the trade early. We sell the spread to open the position. So we simply buy it back to close the position. As long as we're buying it back for less than we sold it, the difference is our profit. And that can come if volatility drops, or the share price goes in our favor, or time decay goes in our favor, or all of the above. Sometimes the value rapidly goes out of them when all of that works in our favor. Like last night when the market went up, so volatility went down, and we were faced with being close to the end of the week, of Friday being expiry. All those were in our favor, giving myself and Sheldon and anybody else who's doing it, because I only communicate with Sheldon today, so I can't share any other examples of what's happened in the last 24 hours. So we don't have to wait the full option term to take our profit, which is just amazing. So that's one of my favorite strategies. What was it again? It was the bear call spread. Let me also tell you about the bull put spread and the iron condor. What are they? The bull put spread and the iron condor. Where do we get these names from? So I missed it before. The bear call spread is called that. Bear because we want the stock market to go down, and we're using calls in a spread and a combination strategy. That's how it gets its name. So who'd like to guess what the bull put spread involves? Which way do we want the market to go? Bullish, meaning, want to give me an answer? Bullish meaning up, yep. And we're going to use puts to trade that position. And then the iron condor, well, that's something really special. Okay, let's talk about the bull spread. So here we have a chart of Intel. Can't believe I was struggling to think of names earlier. Intel, everyone knows Intel. And a nice big company, highly liquid, amazing options liquidity as well, and amazing premiums too, especially when it's high volatility. So I'm looking at this chart, but remember, I would only look at this chart after I had already checked the volatility analysis. And I happened to, on this particular stock, which is a few days old, notice that the volatility rank is 80. Okay, well over 50. Is this a good candidate? Well, it depends on the chart. So we've qualified it on the volatility. Let's look at the chart. So let me go through it with you. I see a strong support at the $48 level. Okay, do you agree? Several touches here. It was once a very good resistance as well. And remember the old rule, when resistance is broken, it will often become support and vice versa. More on that later, okay? It's in a very strong uptrend, as you can see. You don't need to have any analysis to see that it's in a strong uptrend. But what gives us that confirmation here is all the moving averages. Here's our longer term one. It's clearly running up. Share price is well above it. Look at the big space between it. And then we've got our more recent moving averages here as well. They are also in an upward direction. And what stands out to me is our faster moving average has come close to crossing our slower moving average, but it hasn't actually crossed, and it's swung and it's moved up. And if you remember from other trainings you've done with me, when moving averages come together, but they don't cross, it's a very powerful confirmation signal for the share price in that particular direction, in which case this is up. So we've got lots of things that are telling us this thing's going up. Now, why did I mention strong support? We are going to write a put at the $48 level. In other words, if we write a put at that level, what we don't want is for the share price to breach that. And isn't it a case of a really strong uptrend, so the share price is way away from it anyway, and even if it does come back, yet we've already tested it as support. So its ability to break below that is going to require a significant change in market sentiment. So these are some of our safeguards. But at this stage, that put is a naked put. So how do we limit our risk? We buy a put below it at the $47 strike. I tend to choose strikes that are $1 apart because it keeps our investment down to only $100. If we were $2 apart in the strikes, our investment in that trade would go up to $200. That's what your broker would require. So if you want to keep your trades down to a minimum, you would put the strikes $1 apart, and then the most you can lose is that $1 or $100 per contract, less the credit you receive. With me so far? Okay, so let's price up the $48 written put. So here we're looking at our trading platform again, and all of this is automatic. And when you're doing some income, we give you all this. All the screens are set up. We show you how to use this, how to get your pricing, how to place the trade, and all the analysis I've done just briefly there for you. Okay, so we're looking at a bid and an ask between that. I always place my trade to find the midpoint between that, and I wait till it trades at that midpoint. It's only a 3-cent spread, so chances are it's only going to take 5 to 10 minutes to place the trade. Okay. So I'm selling that put there, and I'm receiving a credit, which is the midpoint of 76.5 cents for selling that one particular put option. I then have to price up my insurance, which is at the $47 strike price. And so that goes below that. So I'm buying a put at 47. I've sold at 48. Now I'm buying at 47 for my insurance, and it's going to cost me 56.5 cents. So the result is the put I sold, I received 76.5 cents for. The put that I'm buying, I'm paying 56.5 cents for. The difference is my credit. That is my income. In other words, I'm making 20 cents on this, multiplied by one contract, multiplied by 100 shares. That would give me an instant income of $20 from this trade. The broker required that I invested $100 in the transaction in order to place that trade, but I get my income instantly of $20. So the most I can lose on this trade is only $80. So when I look at what my net risk is and how much I get paid in income from this, I get a return of 25%. And again, all that has to happen for me to keep the full value of this $20 as a profit is that the share price has to remain above $48 within the time frame until the end of the month. And as I said, most of my trades I set to run for about 1 month. Make sense? Who's enjoying it so far? Put up your hand if you're enjoying it, if you're having a bit of fun, if you're excited. I don't want to be the only one excited. Please forgive me, I tend to get very, very excited. I found that with the kids when I was teaching them, I got overly excited. I think that's half the reason why they were excited. Didn't actually necessarily understand it. They just were feeding off my excitement. No, that's not true. They've actually been amazing. Okay? So, how to profit from Intel Bull. Oh, by the way, I didn't charge the kids. Just in case you're wondering, did you charge them? No, I didn't. I could not. Firstly, I wouldn't be able to charge my own son if I'm teaching my own son how to trade this. And I definitely didn't charge the kids or their parents, by the way. In fact, a couple of parents attended, and they loved it too. The worst thing for me was the high that they all went back to school with on Monday. And when the teacher said, "What's going on?" they laid out all of their goals and their financial plans, which is part of the seminar. And I think, I don't know if the teachers wanted to punish them or praise them, to be honest. I think they might have put a few noses out of joint when they said what all their big plans were. I don't think that it went down too well. Not my problem. That's someone else's limited beliefs in those teachers. Well. Okay, so how to profit from that Intel bull put spread. So remember, we are investing $100 to make an income of $20 out of that trade. So our net risk is only $80. That's the most we can lose if things go completely south in this case, and literally would go south. In other words, if the share price dropped through that written strike price. So we entered this trade because volatility was at 80, above 50. That is why we got a healthy return. What I haven't mentioned to you so far is I don't even enter a trade unless I can make a 20% return between the income that I'm getting and the amount I'm putting into it. So the $20 divided by the $100, okay? Unless that's at least 20%, I don't even offer the trade. So what happens is if volatility is low, below 50, then you won't get $20 out of that $100 invested. You may only get 10, or you may only get 15. And as far as I'm concerned, there are so many opportunities out there to get that higher than 20% result from overall risk that I only trade those ones. There's no reason to settle for any less than that. So that's one of my little personal rules. You could trade it if you want, but I don't think it's worth it when there's so many good ones out there. So we observed a clear uptrend and a strong support. That's why we chose to do the bull put spread. So we will make a profit if volatility drops. Okay. We will make a profit through time decay. We will also make a profit, obviously, if the share price goes up. If the share price goes sideways, in other words, it remains below that clear line of resistance that we saw on the chart, if it just stays going sideways, we'll still make our full profit. And of course, if the price goes down, but as long as it stays above $48, we will still make the full value of that profit by the end of the month. And the current share price is at $51.80, so there's plenty of room to make the returns that the trade is promising us, which is fantastic. Okay, let's look at Apple. It's one of my favorite stocks. It's one of my son's favorite stocks. He actually owns a lot of Apple at the age of 13. I started buying Apple stocks for him about 5 or 6 years ago, and he's very proud of how it's performed. And through the result of investing in Apple, or he started investing in Apple for him and keeping him informed of all that, he gets up early in the morning, in the middle of the night, when they hold their keynotes at 3 o'clock a.m. or 5 a.m. in the morning, just to see the new products, and he gets all excited and comes and runs out and says, "Dad, we're going to make a fortune. They're just launching a new iPad, new iMac Pro's coming out, and the new iPhone 10 is coming out and all that." The only problem is it costs me a fortune in buying him the latest Apple gear all the time. Anyway, long story, we love Apple. So we're looking at a chart of Apple. What's the trend? Clearly it's up in this case. You can see that. The other thing we'll notice is that it's recently actually bounced off a line of support here. I'm getting ahead of myself. Volatility rank is at 80, so that's what would cause us to even look at this chart. Sorry about that. Should have checked volatility first, which we get from the data source I showed you an example of earlier. See a strong support at $165. So basically we are of the expectation it's going to remain about above $165 through the course of the next month, and we only need to make our prediction 1 month out, okay? Strong uptrend, as I said, looking at our moving averages. We also see the market swing here. We've got a nice reversal pattern. All 1, 2, 3, 4, 5 days here are up days continuously, most of them green candles, other than that one there. Okay, but that's not a concern for us. Our interest is only what happens below here. So what we're going to do is we're going to write a put at 165. So it's a $165 put. I won't show you the pricing. I'll just drop the pricing in this time for the second time so we can get some more examples. To ensure this position, Apple actually has strike prices $2.50 away from each other. So unfortunately, in this case, we have to invest $250 to place the trade because they're $2.50 apart. Yeah, $2.50 on one contract multiplied by 100. That's where I'm getting that investment from. Oh, here's the pricing anyway. So we can see the $165 put. That's its prices there. And so if we're selling the put for a mid price of $2.04.5, to make things difficult for me to say. So let's price up the put as our insurance below that, which is $162.50 put. The midpoint of that one is around $1.44.5. So the result is we've sold the put there and received that amount of money. We've bought this put and paid that amount of money. So our credit is 60 cents per contract. If we were only trading one contract, our income would be $60 from this trade. However, our investment in this case, because the strike prices, because Apple is a more expensive stock, the strike prices are further away. There are other choices as well. Won't get into weekly options right now. I'll share that with you when you do instant income. There are other choices of options. We didn't have to only choose this series, and there's different dates we could have chosen. It's within 2 weeks from now, and I just have my reasons for liking the 1 month options because they don't require much active management, which means I can invest less time daily to manage my trades. Make sense? If you are someone who wanted to spend more time trading even more often than I do, I don't know how that's practical because I run a pretty big portfolio, but for reason, if you were to trade all night long, from when the market opens to when it closes, then you may choose other options. I choose this because I literally keep options, okay? So just a bit of extra insight there. So our net risk is what we're invested minus what we've actually received as instant income. So the most we can lose out of this trade is $190. So if Apple stays above $165 by the options expiry, which is around 1 month here, we will get a return on our money of 31.6% return. Who would love a 31.6% return on money in 1 month? On a high probability trade where all Apple has to do is stay above $165, where it's spent a lot of time for the last year. Anyway, okay. So how to profit from Apple bull put spreads, just a quick summary for you. We are investing $250 to make an income of $60. So our net risk is only $190. That's the most we can lose, even if the share price were to drop like a rock. That's the most we can lose out of this trade. We entered this trade because of volatility being 80, above 50. We observed a clear uptrend and a strong support. We will make a profit if volatility drops, if time decays, if price moves up or price moves sideways, even if price moves down, but stays above $165, we still stand to make the full benefit of the profit out of this trade. And the current share price is as low as that. By the way, the strike prices that I'm choosing based on a thing called delta, the delta actually tells us what the probability is of the share price being in the money at expiry. Most of the deltas we're choosing are around 0.3, which means it only has a 30% chance of being in the money. In other words, it only has a 30% chance of working against us. In other words, we're picking high probability trades of 70% or more. In other words, the market itself is telling us, because of where we're choosing our strikes, we have a 70% chance of the trade stacking up in our favor, and that's before we add any of our own analysis to it. It's incredible. Did you hear that? Market's telling us 70% chance of this trade working out in our favor, even if we read the chart badly, just because we chose those strikes. What an edge we have here. I have never seen anything like it. Okay, let's talk about the iron condor, which is one of my absolute favorites. I do more of these than any other strategy. Here's the iron condor, and we see Starbucks. What I want you to observe about this is it's neither in a clear uptrend nor a clear downtrend. And therein lies the excitement, because did you know that only 30% of the time does the stock market trend? In other words, it only is running up or down 30% of the time. So if you only ever have a strategy for making money when it's rising or falling, you are missing out on 70% of the opportunities out there. So you absolutely have to have in your arsenal of trading strategies a strategy for making money in a sideways market. And that's exactly how we use iron condors. By the way, you can use a call bear spread in that way, a bear call spread in that way. You can also use a bull put spread in that way as well within a sideways market. But I want to show you how you can compound the returns even more. So even if you like the returns from those two that I've shown you so far, check this out. So in an iron condor situation, we would apply an iron condor when we believe that the share is in a sideways trading range. And what do you notice here? Firstly, we're looking at this chart because it had an IV ranking of 82. Sorry, my dog just needs to go out. Here you go, puppy. Sorry about that. On a webinar. All right. So we're looking at a sideways trend, and how I'm determining a sideways trend, because I can see a very strong support below where the share price is currently trading at the $55.25 mark, okay, which is there. You can see many, many touches here. Even that one's in that range, even that is in that zone, and it was an extremely strong resistance level one. So this is a very significant price level for Starbucks at $55.25 mark, okay. What we also notice is very clear, just above the share price, is at the $60 mark, nice round number. Remember, for those of you who have done my previous courses with trading, round numbers can be very significant. okay? And we notice we've got a touch around there, we've got touches there, touch there, touch there, touch there, and, you know, this one almost got there, and then there's this cluster over here around that $60 mark. So it's a very significant price level for Starbucks. Did you hear last night that Starbucks are closing their stores? We go for trading or something like that. That's kind of working in my own condor favour when that happens, when they said all this stuff and trading. Anyway, yeah, good news is great. So we see strong resistance there at $60 level, strong support there. So here's what we're going to do. Which one do we choose? Do we choose the bear call spread or do we choose the bull put spread? Which one would you choose? Because either of those could apply. So check this out. Clearly a sideways trading range. Let's do a bear call spread and a bull put spread. Not all, and. What's to stop us from doing both? Remember, we do the set of calls above the stock price and we do the set of puts below the stock price. Why not go for twice the result? Check this out. So I'm now going to price up, writing a put at 57 and buying one for insurance at 56. I'm also going to write a call at 61 and buy a call at 62 as my insurance. This is what it's going to look like. 26 days to expiry. We've got a high IV ranking. We're going to pull a huge amount of premium in by doing two legs. So that's where we're selling the call at 61. We're receiving an 84.5 credit there. That's our insurance. $1 difference between us. So it's only $100 that we need to invest to put that trade on there. Our credit is going to be 27 cents. In other words, 27 cents divided the $100 that we're putting into the trade. That's an instant 27% return right there, which is greater than my 20%. Fantastic. I'm happy to put the trade on. Okay. Why not sell a put down here as well? So one of the things I want to show you is, I'm going to wind back here. I'm sorry to do this to you, but if you notice, and I haven't covered this yet, you notice here, selling the put up here. See this here. This is your delta. I like writing when the delta is around 0.3. What that's saying is it only has a 30% chance of being in the money in the time to expiry, which in this case is 26 days. It's the computer is actually telling me statistically what the probability is based on a whole bunch of history of actually breaching that price level in the time frame. So I'm happy to write at that strike price, even though it's way above my support level. It's still further away from the current share price than what that is. Now, it is an aggressive trade because if you have a level of comfort being outside of your resistance and support levels, I totally understand. And there are trades that I do like that as well. But this one statistically was working in my favor. The share price is right up there. Okay. So I'm going to set up the bear call spread. I'm also going to sell a put bull spread at the same time and receive a credit for both. Okay. Now wait, there's a kicker coming. It gets better. So basically what I want here is that the share price continues to stay below $60 or above $57. However, I'm getting a huge credit of 49 cents when I take 27 plus 22 cents, 49 cents. In other words, my break-even point, even if things go wrong, is 49 cents above that one and 49 cents below this one because of the huge return. The other thing I want to share with you is, even though we're putting on two positions, it can only end up badly at the top or badly at the bottom. It can't go bad both at the top and at the bottom. It can only end up in one of the spots. So the broker doesn't even require collateral for both. You only need to hit the collateral for what the greatest distance is, which in this case is both of them are $1. So even though we're doing two trades, you're still only needing to invest $100 to put the trade on. Isn't that amazing? Put your hand up if you agree that that is just so incredible. You're getting twice the bang for your buck, and you thought your bang for buck was great before. Okay, so let's go through the numbers. Wait, I'm finding myself starting to froth at the mouth with excitement here. I'm sorry to do that to you, but let's have a look at this. So our investment is still only $100, but our $49 credit results in a $49 return to us. So our net risk is $51. In other words, we're actually, as a net, we're only investing $51, yet we're making $49 if Starbucks It simply remains below $61 or stays above $57. In fact, break even's further away from that. 86% out of this one trade with only 26 days to go to expiry. 96% return. And the share price can go up, it can go down a little bit, and it can go sideways. In fact, it's got a lot more room to go down, even so, and we know that we're protected by that strong resistance above it. So that's amazing. Now, there's a couple of ways you can trade this. You can get really excited. Who's really excited at that possibility? Okay, put up your hand. You're really excited about that possibility. Fantastic. Okay, I'm going to lower your hands now, and I'm going to say this. Who's scared that we seem to be a little bit close to these strike prices here? It's a little bit tight. Who's feeling a little bit nervous? Absolutely. So here's what you can do. Because you're getting twice the return, you don't have to set your strikes that close. So your premium that you return will be based on how close your written strike is to the current share price. So if you're going to do an iron condor, you're going to do double, why not be more conservative? Let me show you the conservative approach, okay? So you notice here we've got another line of resistance up higher, and we have our line of support down here. What about if we were to write and set our strikes further out? Let's have a look. So this is a lot more conservative. So we're putting our written strike for the call way out there, much further away from the share price, also 2 resistance levels away. In other words, the share price has to penetrate both those rock solid levels before it even gets anywhere near to us. So that's very conservative. And we've now put our written put position below this support level, so we're in safe territory there as well. Let's see what the results be. It won't be as high a return, but it still will be a good result. Remember, our IV ranking was high, so options will still be priced quite good. So here's our prices. And when we plug that in here, I'll show you. So we're writing same expiry, same option series. We're just choosing strike prices that are further away from the money, okay? So we're now selling a call at a $62.50 strike, which is a lot higher than we were before. And we $1 away from that. Oh, sorry, $63. Sorry, $63 is where our strike is. $1 away from that is the $64 strike we're buying. And this time we're going to get a credit for that. And then we're selling a put at $55 strike. And we're buying a put at the $54 strike, which is further down than what we were before. We were up here before, okay? Now our credit will be smaller because we're further away from money. Still getting a 16-cent credit. That doesn't look so good because it's less than 20 cents. Remember we talked about 20 cents earlier. However, we've got the other side of it to back us up, which is 13.5 cents. By themselves, these trades are not that great because the returns are less than 20 cents for the $100 that we're investing. In other words, the $20 we're going to get for the $100 invested, right? So it doesn't look very good. But when you combine them together, we're getting a credit of 29.5 cents. In other words, we're making $29.50 for the $100 invested. And remember, we don't need 100 down here and 100 up there as well. We only needed to cover our risk, and the share price can only ever go bad that way or go bad that way. So we only need half the collateral to fund the trade. It's still only $100. In other words, we stand to make $29.50 for $100 invested. We get that $29.50 as instant income when we open the trade. So we actually get a 41.8% return if Starbucks stays between that resistance level or that resistance level and this one down here. It can go all the way up there and all the way down here as long as it doesn't cross over this one. And even then, we're still at break even somewhere in there. Even then, we're still at break even somewhere there. It's only if it goes above $64 or goes below $54 that we stand to lose the entire amount of our investment, which is $70.50 net. Who thinks that's amazing? Put a bit of hand if you think it's amazing. Come on. I still think it's amazing, so I've been doing this for a long time. You better think it's amazing too. Well done. Thank you. All right. Now, this is where it gets really exciting. Do you agree that this is a very conservative trade when we look at how far away strike price-wise we are? Who of you would be willing to invest a lot more than $100 if you're that far away from the share price and you're still getting a great result? Put it by hand if you think you'd find the money to put more into this trade. Yes. Now remember, the share price can go sideways. It can stay where it is. It can go up all the way to there, go all the way down, and it has to move. If it's going to break this one, the green lines, going to break them, it has to do so in the next 26 days. And so you've got a lot of protection that has to happen before that, because you can look backwards at how it normally trades, and it's just going in this range anyway. So if you had it Who might be willing to invest $10,000 in one of these? Just curious, just putting it out there. Who might seriously think about it? Oh yeah, of course their heads are going up. All right, that would generate an income of $2,950. And guys, I do more of these every month than I do the other two. The other two are amazing, but I do more of these than I do the other two. So ask yourself, if that was the income from one $10,000 investment in one of these trades for the month, how many of these sorts of trades would you have to do in a month for financial freedom? It's a serious question, isn't it? Suddenly the penny drops. I love, whoops. It's a bit like that. Okay, let me go through another example. Who wants to see one more iron condor before we finish? Anyone? Yep, perfect, of course. Okay, good. I'm running away for... Do I have your permission to take a little bit longer? I realise there's still a lot of ground I want to cover here. Is anyone in push to leave? Because I'd love to show you this example. I don't want to skip it. Who's okay with spending just a bit more time with me? Yep, perfect. Okay, good. Thank you. I appreciate your time. Alrighty. Having presented this particular webinar for the first time, I didn't know where time was going to go. Obviously, I need to take some stuff out. So, IV ranking is 90. Amazing. So, we expect a high return from this. We're going to make it really quick. It's another iron condor opportunity. We're going to write our strike outside of resistance, and we're going to buy below support. Okay. The credit we're going to pick up is 55.5 cents up there, 40 cents for this position here. $1, no, it's $2 between, so $200 investment to get into this trade. $250, sorry, $2.50. Okay, so we're trying to go too fast now. $162.50 and $165. So our investment in a single trade is $250, which gets us up there and down here. We don't have to double it. When we look at our credit, we're making in income $95.50 for the $250 invested. In other words, our net risk is only $154.50 because we got that $95.50 straight away when we open the trade. If things pan out and, which is this, IBM, have you heard of them? If IBM remains under $162.50 by the end of the month or stays above $147, in other words, stays below its resistance and stays above support, so chances of that are very, very high. As I said, I'm only even picking trades that have a 70% probability of doing exactly that. Remember, based on the delta, okay? So conservatively, so that was the aggressive trade, making a 62% return. If we were to take a more conservative approach and put our strikes much further out, give us more room for error, more margin for error, it would look like this. Stand to make $53 for a $250 investment. Net risk is $197. Even conservatively, we're still making a 26.9% return if IBM stays under that red line there and above this red line here in 26 days. Amazing. Okay. So working with probabilities is really important to me, and where I choose my strikes, I teach you that in instant income. We are specifically choosing trades with high probability of profit. We take small trades and we do as many as possible in order for the probabilities to stack up in our favor. I do a whole lesson on that in instant income. The more trades we place, the more chance we have of the statistical probabilities working in our favor. So rather than having a few very large positions, I'd rather have 130 to 250 positions open, taking smaller positions and allowing the statistics to work in my favor. That's the important thing. There's a whole lesson on that. So we see over a dozen new opportunities each day. So it does give you the opportunity to really open your portfolio up. So from what you've seen using spreads, making money is actually very simple. If you know all the components to it, I know I've gone very quickly through it all, and I've tried to share as much as I can, but there's lots of elements of charting and analysis and all that I still need to show you. So basically what we're saying is all you need is the knowledge and the system, and how do you get this? And I've alluded all along to our instant income total support live online trading program for the first time. I've never actually delivered a full course online. In other words, you don't even have to geographically leave where you love being. Okay, so let me tell you about that. Would it be okay if I spend the next 5 to 10 minutes telling you about our new instant income program? Put up your hand if you'd love to hear about it. Beautiful. Thank you. Wow. Couldn't ask for a nicer response. How kind of you. I'll promise to keep it as short as I possibly can. So it's a live online training program. Let me tell you that. So who is this program for? If you're someone who's been struggling to trade successfully, this is for you. You might have tried it all, day trading, futures, stocks, forex, or even options, and had, for whatever reason, it didn't work out for you. Maybe you weren't writing. Perhaps you found trading complicated so far, yet you know you can do better if you had the right strategy and the right support. And I want to emphasize support. I designed that program to give people plenty of support, and I'll tell you why. Or you're someone who is determined to find success, which is why you're here today, investing your time to listen to me, okay? Or you've been looking for a proven, successful trading system that generates substantial and consistent income using a high probability of profit, the way that our trading system does. So what are you getting as part of instant income? You're going to get my trading for my millionaire blueprint. That's what I'm calling it. This strategy literally gave me the cash flow to accumulate all the other investments that I hold today that created a multimillionaire out of me. And it started with this strategy. It started with options trading. It started with spreads. In my very first month of doing spreads, way back, when was that? 1998, 1999, when I did my first big trade. I remember earning just short of $12,000. I think it was $11,884 in profit. It was my first big one. I'd been trading for a while, smaller positions, and I did this one particular spread. I think it was on CBA from memory, and it was actually a double top scenario, so it was a bear call spread, and I made in premium $11,884. That was the turning point for me, and these strategies still support me and look after me in that way. And it's where I started to become the multimillionaire that I am today. So I want to give you that. Okay? You need to know your charts. I will go through the charts very, very quickly. I have spent more time with charts than ever before in the last few years. I've been trading since 1995, and I just think I've gotten better and better and better at it. And spreads make things actually a lot more easy because you don't have to be that accurate with predicting the share price movement, as long as it doesn't go where you don't want it to go, which is a lot easier than needing it to specifically go in a certain direction, if you know what I mean. Okay? So we give you all of that in instant income. Classic chart patterns. We trade all these patterns, double tops, head and shoulders, triangles, wedges, all those sorts of things, all these breakouts. All these breakouts create a scenario where share price breaks below support, but then becomes resistance, and we just whack some calls on the top of that. If it's breaking up to the upside, we're using a pair of puts below it, as I showed you. And when it's breaking in a sideways band, that's a perfect opportunity for an iron condor. But you need the classic chart pattern reading to see that development to get those sorts of returns. Okay. We cover all the events that drive the markets. I have a routine of checking the news and knowing the impact it will have on my portfolio. Again, the news impact is far less for spreads, because sometimes if it has no impact, that's great because it just goes sideways, right? We don't always need it to move. So we talk about that. Candlesticks are my favorite thing. Visually, they give you so much of a story as to what's actually happening on the chart. I've covered a bit of that tonight, but nowhere near enough to get you started, I suppose. Okay, candlestick basics, really important. But bearish reversal patterns are the most important. These are the patterns that occur when the share pulls back or retraces back up to resistance, or falls and retraces back to support, and we then do one of the spreads. So we need to know these patterns because this is our signal to put the trade on. Okay. Support and resistance. It's probably the most important thing when it comes to spreads, as you've seen how much our strike selection is determined by confidence in recognizing support and resistance levels. So we spend a lot of time on that. And of course, understanding trend. In this case, it's raise your hand. I just had a computer glitch. Oh, good. Oh, sorry about that. Oh, yeah, I completely lost all control. And so thank you for still being there. Something else we'll look at is the data source. Actually, the ones with the highest implied volatility. This is, and we need to teach you this as well. Okay, obviously the trading opportunity is right there, so we know to even look at the charts and get those higher premiums. Understanding how to read the option, those pricing, and where you get that, it's important. The pricing when trades go over and break-even points and all that, obviously it's an important. You need to exit early, as an example. My parents, I used to call it. I've got checklists. One's for pre-market things to check. In a trade, how you go about planning a trade. Basically, the whole checklist to guide you on those principles. How to actually place the trade, and then once in a trade, how to manage that trade. And part of that is managing risk and managing reward. They don't always work out in our favour, but there is an opportunity to limit losses as well. And there's a process for that which we call defensive strategies. So it's about taking profits or actively managing those that start to breach our written strikes, and there's a process there. What I haven't told you yet is if it breaches your written strike, you can buy just that strike price back to close and hang on to the bought position and turn what started to be a losing position in your favour and pick up a very healthy profit. I did that last month, and on one trade, I closed out the written leg and held onto the bought leg. And when the share price then went through that, it became a straight put scenario, and the put actually paid me $30,000 in profit. So it was a very healthy return on that particular trade. Okay, so how is it delivered? Live streaming online through the very technology that you're using right now. That's actually how you attend the program. We think that will be awesome. You don't have to leave home. You don't have to sit in the live seminar. You can actually just attend from the piece of quiet of your desk. I think that'd be sensational. Yeah, awesome. Okay. How does it work? It's a 2-month program, and we're live online each week, presented via webinar, like I'm doing at the moment. The good news is each session is recorded, so if something else comes up and you're not able to attend that particular live lesson, it will be recorded for you to review, obviously at the earliest convenience. New course modules each week. I've already written this course, by the way, and I've presented it to Sheldon, as I told you about earlier. We've got the 47 trades and only 3 wrong and still 3 going. And I've delivered to the kids. I'm a third of the way delivering this course to the kids, so it's a new course, but it's not undelivered, if you know what I mean. It's got all the pieces there and getting results. Your workbooks and action materials are via downloadable PDF. So again, you don't have to print things. You can just download them from our website and use them as we go through the material as I present different strategies to you. And of course, we have question and answer sessions included with each particular lesson. It's really important. So I share my current trades for discussion. I actually open up my portfolio to you and explain why I got into certain trades. I use setups and examples like I just did, except with a lot more information as to how I got to that point than we had time for today. We also review your trades for feedback and guidance. And remember, the emphasis on this program is support, support, support. Having the luxury of being able to present it online in this fashion and not having to do it all in one weekend, and then you go home and before you even get to try it, you're leaving. The benefit now is we're piecing up over time, so you actually get to apply the knowledge, test it, whether it's in a live account or a paper trading account, get feedback from me, get guidance, and support, support, support. You see how amazing that could be in terms of really sort of being there for you, supporting you, I suppose. So I'm really happy with what we've got planned in that delivery process, because it gives you an opportunity to be out there actually testing the strategy at the coalface and having me look over your shoulder and guide you and hold your hand with every one of those opportunities, which is so much better than sandwiching it all into like a weekend course. Okay, so you'll get advice and support on how to manage your trades. And I share my market outlook and forecasts. So, for example, I'm always reading news and I'm looking at trends all the time. So particularly, for example, a month ago, I knew that the tech sector was going to do very well this month. Even Facebook, with all the bad news, has actually gone up. Apple has, Netflix has, Intel has, Google has. The only one that hasn't done well is Tesla, but we short that one all the time anyway. So we don't care about Tesla. We love it when Elon Musk does another stupid thing. The bear call spreads love Elon Musk and Tesla. So advise how to manage your trades. I share my market outlook and I use specific examples with stocks like that and tell you what to trade on it. Yeah. So talk to me one-on-one if you have any personal questions. It's obviously an important part of the support that you get with that program. All those charts that I showed you pay these days. To pay, I don't know, squillion to get charts. This car, with the program, it's included. It's incredible. And then broke's really cheap. My life price is actually out of feed. I think $15. Is it a month? I think it's a month. So it's negative stuff. You don't put the software, you just data feed. Only pay for the markets that you're in. So incredible. Applied market. I'll see if I'm demo account 100,000. The data and you see very real just using paper, which is fantastic. So if you're not ready to get data, but you're trading as part, still want me to trades. I'm doing that with the moment. They don't have money in the children, but I'm still doing it with the same business and the same as if it was money. They hone this so we can end up for the grad course. So use skill and build your confidence without any risk to your own funds. It includes my unique trading templates pre-configured for your convenience. I literally have about 8 tabs within the trading platform, all set up with different pieces of information where I get different levels of data as I've shown you here. I give you all of that. It's all included. And like the kids are doing at the moment, when I'm talking about the school kids, they're playing the trading game using the charts and what I'm teaching them and the platform. And every morning they're comparing notes. Oh, are you ahead of me or whatever on your account balance? And it's a lot of fun because people learn by doing. And this is the problem that I have with delivering this type of content. Just in a classroom environment, you don't get to do all the doing like we're able to do in the interactive format that we're now able to do. And through this competition, I think that gets people more engaged. Would you agree? Raise your hand if you agree. Competition would be great. Yep. Okay, perfect. So I'm going to teach you everything to be profitable. Learn how to, it's every month. Balance. I know it's paper trading money for them, but they're very excited. You are any level leader. You are new to trading. Been trading. No, it's that the life change that will transfer you trade after you're a beginner or experienced. No, I get the difference. Income support. You'd at $6,000. That's phone 80. Yeah. Minimum of a need from you. He's going to do something else instead. So I want you to really seriously, over the next day or so, I want you to seriously look at your calendar and decide if it's time to get real. Because if you're willing to do the work and put in a minimum of 8 hours a week to get you started and up and running, I still put in a minimum of an hour a day, 5 or 6 days a week doing this. And that's for me with a very, very big portfolio. And some days I spent more time, like in the next 2 days, being the end of the month, I'm closing out more of the portfolio. It may take me 2 hours for the particular trading session, but I'm willing to put in the time because the income and the benefits and the lifestyle that it creates is enormous. So are you willing to make the time? Put up your hand if you think you're willing to make that time. I'm just curious. Yes. Awesome. Good job. So I'm only here if you want to get real. Okay? So expect big results, as the others who I'm showing this particular method and this very course at the moment, they're getting big results. And I am going to work you to the bone to get those results, if you don't mind. So part of the support, I'm saying support, I'm going to be here for you. I'm going to hold your hand, but I'm also going to work your tail off. So if you're happy to do that for the result, I think you work very hard. It would be a little bit, but you're going to say, I love it, because your life will love you. Imagine freedom. Quality of your family, desire to you. Do you want freedom from being stuck in your current job or business? You won't need that if you know how to trade like I'm going to show you. Maybe you want to help others less fortunate than you. Or do you just want another way to make money? As I said, my kids are using it as their part-time job. So I'm going to do something special for you. I love you guys. I haven't seen you for a long time, so I really want to look after you. So for the next 5 days, all I want you to do tonight is to make a decision to talk to me some more about it, okay? To make an appointment with me. That's the only decision I want you to make, is to make an appointment. And for the next 5 days, let's say during that time, we have a conversation, we talk one-on-one. And if we decide that this is a good opportunity for you, then you've got 5 days to grab the special offer and get everything I've just mentioned for only $3,997. Okay, so it's about half what I think the program's actually worth. And of course, you can ask about the monthly installment plan. If that's more convenient for you, let's talk about that during our meeting as well. I'm going to give you 100% money back guarantee, and it's simple. It's quite simple. If you do everything that I tell you, and you follow the entire process, all the checklists, all the market outlooks, and every procedure that I'm going to give you, and there are many, and if you don't make at least double your tuition back within the next 12 months, I will gladly refund your money in full, no questions asked. Now, some of you might be thinking, sounds amazing, but I have a few questions, with various different things. Again, all I want to do is get that time with you. Let's make an appointment. You will get a lot of value from that appointment. Whether you end up doing instant income or not, I know spending time with me, you're going to get. What I want you to do is bring some data with you. Tell me about what you're doing, what investments you have at the moment. Let's talk about that. Let's work out if maybe something else might be better suited to you. Maybe you need to be buying or selling a property instead. Let's talk about that. It doesn't necessarily have to all be about instant income. Have that appointment with me. I think I owe it to you. I haven't seen you for a while. I haven't been around for a while, so I feel somewhat that I could privileged to have an opportunity to catch up with you. Okay? That you'd appointment with me, please use Q&A panel. You can see the Q&A panel. Just Q&A panel. Just type in your name and say, would love an appointment or something to that effect, so I know who you are. If you want an appointment, type that into the Q&A. That would be me. Then I'll contact you either by mail or telephone, and I will set a time that's mutually good for you and me. And at the moment, let's discuss the whole scenario and see if this is the right fit for you. And then step 3, if instant income is the right choice for you, we'll see how we can get you involved. Otherwise, let's see how I might be able to help you in some other way. Okay, so for the action takers, they're always around. If you book and pay in full, the $3,997, the first 10 people to do so will also get a bonus seat at a live version of the same course. Love me and miss me and, miss the excitement and the pleasure of being around all the other attendees live, hanging out for 4 days in a live training boot camp. I'm going to have a boot camp for those who still want that sort of interaction, who miss that style of learning. And that is going to be held in July. And if, as I said, if you book and pay, take the fast action bonus, you'll actually see at that program. included at no extra charge. That has a value over $5,000 in itself. Remember, all my stuff are either tax deductible or could be invested in through your super. So that's another way of actually funding this, and same with your trading, okay? So when is the program? The home study part of it starts immediately. So let's say you were to make your appointment with me and we decide at the end of that you should get involved. It's going to be really good for you. I would immediately start sending you the bits to do at home, and I'd set up your platform. There's a process of actually logging in and setting up on your computer. I would send you the watch list, the configuration, the setup of the charts and all that. There's a whole rigmarole we have to go through so you can start playing with all that stuff. The online sessions itself, the content, the delivery, the live delivery, they're not going to be recorded. I'm actually going to be live, as I am at the moment, presenting you the content. That will start in a month from now, around mid-May. We'll work out all the dates of that and share that with you. So there's plenty you need to do before then in the pre-work, so don't feel like it's a long time to wait. And then the live 4-day bootcamp, for those of you who decide to take me up on that fast action bonus, that will be in 3 months' time in July. So plenty of time to get your diaries and calendars ready for that. Limited places, of course. I can only work with so many people. So if you think you'll most likely be joining, please contact us today. Just say that you're interested in the Q&A box, or send me an email. I'll put the contact details up there. You don't have to pay anything today necessarily. Just say that you're interested so we can have a chat about it, okay? Unless, of course, you want that amazing bonus for the first 10 people, then sure, still can pay, not a problem. At least put your name down so we can hold your spot until we have had our appointment together to chat about it. That's it, folks. There's the telephone details, the email, and there's a special order form. If you want that link, just send it to me and you can actually enroll online. But other than that, thank you so much for attending this evening. I've thoroughly enjoyed it. Sorry it took so long. Well, very long. Obviously, need to cut that presentation down a bit, but it's been a lot of fun, and I thank you, and I look forward to having an appointment with you. So please use the Q&A now to book that appointment, and we'll chat about it. Is Jules out for tonight?